Okay, good morning, everyone. You're most welcome to today's episode of the Market Snapshot. My name is Nobert Kiiza, and I'm the education partner for FX Pesa here in Kampala, Uganda. I'm very happy to be with you guys today to take you through what has essentially been happening in the markets, and I think we can get started. So, just quickly to see what's happening over in the forex space, I think you guys can see how things are currently looking. Yesterday we had CPI, and of course the CPI print, I would say, was a bit mixed since we saw that there was actually a slight decline on the core CPI, and we actually saw that the CPI increased on a monthly basis on headline. We also saw that on headline yearly basis, there was also a slight increase there. So as of now, this is what we are seeing. We are seeing a bit of choppiness on the Euro USD, some choppiness on GBP USD. However, GBP USD, as we shall see on the economic calendar, we saw actually for the first time that now we are seeing some positive GDP coming in. AUD/USD is looking fairly choppy there, but of course up about 1/10%. And we are seeing some relative choppiness also on USD/JPY. Looking, of course, on the indices surged a bit yesterday during the US session, and of course this was on the back of fairly solid inflation, but also there was a resurgence on the tech heavy stocks. Rather, there was a resurgence on some tech stocks like Nvidia, and that of course pumped up the upside for S&P 500 and the NASDAQ. So again, Japanese index, of course, taking a bit of a pullback on the high that it's been reaching. DAX also reached a high yesterday, an all-time high, and we are seeing a lot of that bullishness as we go towards the mid of April. So rather mid of March. So let's cross over to the calendar. See what we had yesterday on the CPI, but of course now also see what we can expect for today. So yesterday's CPI came in a bit mixed, and I believe even a market reaction for those of you that noticed what happened on the charts. We saw that there was actually a mixed response to the CPI data. However, we saw that actually the headline CPI on the month and yearly basis increased from 3.1% to 3.2%, and we actually saw a bit of a pullback on gold. We saw a pullback on the indices, and of course a pullback intensified also for GBP USD and Euro USD, as we shall see on the charts. Now core CPI again looked a bit sticky because yes, it declined a little bit on the core CPI yearly basis, but still looks a bit choppy there. Then of course core CPI also declined a bit. Now looking, of course, focusing on the particular items that contributed to that increase, let's just look at US CPI year-over-year items. So for year-over-year items, we saw that there was actually a pickup on inflation on the transportation services, and we also saw that there was actually a pickup also on there was a slight decline on foods and beverages, slight decline on energy, and energy actually now, which used to be actually one of the big things that was affecting CPI, especially last year, seems now to have receded quite substantially, and there are now a few new components that are actually now affecting the CPI, as you can see here, most especially transportation services, which of course is really something from seasonality. We are seeing that seasonality kick in, and I think it's what's affecting transportation. Looking also at the CPI monthly basis for headline to see how those improved. We saw that energy actually increased a little bit from negative 0.9% to about 2.2%. We saw transportation services also, I think, was one of the bigger contributors to that increase on inflation. So I think as we go over the next few months, we shall see the Fed, I think, most probably pushing back on that. They most probably will push back on the cut narrative. If you guys recall, when Powell actually had his recent testimony at the Senate. He did not really emphasize the timing for the rate cuts, but he just maintained that the rate cuts are actually going to happen this year. So the fact that traders and of course markets are not really certain, the only really like guidance or catalyst that is driving any decision making on by traders is essentially that the cuts are going to happen, but the timing is now something of another story. And now seeing that we're having those hot prints, fairly hot prints, I would say, it then points to a potential, pushback even harder by the Fed. The Federal Reserve is going to be meeting next week. I think, yeah, it should be next week, sometime next week. So we need to wait and see what is going to come out of that. But we also have retail sales and PCE data later. We have it later this week. So I think there's going to be a lot to pick from there. So DXY has been in a fairly decent downtrend from the past few days. And I think if you see the downtrend from the CPI for last month, we are still on a steady decline. So that steady decline again is potentially pointing to sort of like traders are pulling back on their dollar longs on that rate cut narrative. Yes, I know the Fed most likely is not pushing it as much, but the fact that we know that the rates are going to be cut sometime this year, I think we are seeing that descent on the dollar. Seeing also that 2024 tends to be an election, rather election years tend to be really, I would say, fairly bearish for the dollar. We should see, I think, over the course of the year, we should see some weakness for the dollar. So from CPI yesterday, there was a bit of a choppy reaction from the CPI. I think you can see it from the candle that we had, this candle right here. But we seem to have bottomed on the DXY for the short term around this level of 102.366, which I think also, as you see on GBP USD and Euro USD, it was at this point that we also saw them retracing from those highs that they had. So there is, I would say, some sort of like steady upside move on a DXY for now. We need to see how it performs along these levels. And if we see it potentially breaking below this level, then we should see it continuing its downtrend. It's still in a fairly big downtrend, as you can see, guys. And I'm thinking we are going to wait and see what happens there. Now, I also thought it would be wise for us to see what is happening with the currencies. If you look at the currencies, there's this website which is called Macro Micro. This is how the currencies are doing. And you can see actually the best performer right now on a monthly basis, we are actually seeing that AUD is looking great. So I was expecting to find the USD around here, but it turns out that it's actually not here, and it's actually this way, okay? So the dollar right now is actually in declining currencies, and I'm thinking this year might be the year for risk on currencies like the pound, like the euro, like the Australia dollar. We are going to see some of them resurging this year on the back of dollar weakness. Now, for today, this is what we have on the calendar. Let's just see. We have GDP data coming out for the pound. On a monthly basis, GDP improved. We are seeing that it actually moved from negative territory to 0.2%. I suspect that also explains why we are seeing some relative strength for the pound today morning. Could be on the back of that improving GDP. But on the yearly basis, the GDP is still in negative territory. Actually, it declined to negative territory, and we have to wait and see how that happens. But there has been some kind of a slowdown. I know that the UK entered a technical recession 2 quarters ago, and we are seeing that there is still that slowdown taking place. We are seeing industrial production also declined on a monthly basis. On a yearly basis, it also declined, indicating that there's that slowdown that we are observing with these currencies. So going later into the day, we have some data that is coming out from China in about 46 minutes. And again, we have crude oil inventories also coming out. So the oil has been relatively strong. We've been seeing it steadily increasing. And I'm thinking if we get a lower crude oil inventory number here, then we could expect there to be a sharp move on the oil prices as we go along. Yeah, so Today is not, I wouldn't say is that much of a busy day for the markets. We just have to trade what we see on the charts. And I think traders are also waiting for what happens over the next few days when we have the retail sales data and the PCE data coming out. Yeah, so that's really what we have on the charts, guys. We have the 30-year bond auction. And of course, if we get a higher bond auction rate here, it could also spell some dollar strength. But I know that the auction yield rates have been declining for some of the bond assets, such as the 10-year. We have been seeing that decline, and I think it's what has kept the yields relatively choppy. Yeah. So before we cross over to the charts, I just want us to go over this quickly here. Right now, for those of you that are not aware, we are currently in a blackout period for the Federal Reserve. The blackout period is ahead of the 20th of March, which is when we are going to have the Federal Reserve Bank having its policy meeting. So they're going to be 2-day meetings, and they're going to kick off on the 18th, and they will be concluded with a conference. So within this time, we do not usually get Fed speakers. So I think we are going to see that risk on taking place in the market. I'm sure most of you have observed what has been happening with the pound dollar, with the euro dollar. We have been seeing them undergoing some relative strength, and it could also be during this blackout period. So typically during these blackout periods, we tend to get some relative dollar weakness. And we are also seeing that the VIX, which is the fear index, has also been receding on that potential, as you wait for the Federal Reserve. So that's really it from just a bit of news on what is happening up in the markets. We also saw that Japan also had an improving GDP position from a data we got earlier, and I suspect it could also be why we saw a bit of a sell on the JPY pairs. So before we cross over to the charts, I just want us to look at this COT, the COT report, to see what is happening with open interest positions for gold. Okay. Okay, so this is what we have right now. Looking at the data that we had from the 5th of March, which was data for last week, this is where we are currently standing. Okay, the biggest open interest, or the open interest, which is showing us the bigger side of the open positions for gold, is on the side for the sell. We are seeing that the swap dealers are building up on a short position. They increased by 37,491. However, managed money build up on their long position by increasing by around 41,221. So at the moment, I think the fight is between these two, the money managers and swap dealers. But knowing that central bank purchases have also been high, especially for China and India, there have been some rumors potentially that the BRICS wants to set up some kind of gold-backed currency. So I think it could be one of the contributing factors to why we are seeing China really raking up on those purchases for gold, and India as well, because those are two countries part of the BRICS. But of course, we can't really relate that to what we are seeing on the charts. It's better for us to focus really on what the futures traders are doing and to see what the open interest is. So I think, yes, we are going to see that build back and potentially a reversal or a retracement on gold, but we could see gold broadly higher this year. And I think every single trading day is going to see some kind of bullishness for this particular asset. So that's the current position that we have. I think now it's time for technical analysis. So I want us to cross over to the charts and see what's happening over there. Okay, so let's cross to the charts in a moment. Okay, so for the charts, we are going to start with the Dow Jones, which of course, with FX Pesa, this is the US 30 roll. So This is what's currently happening on the Dow Jones, and we are going to look at potential trading opportunities for it today. So yesterday we observed there was a bit of choppiness or indecisive movement on the Dow, where we saw it actually breaking below. Um, it broke below this 61.8% fib level, but immediately after breaking below it, just a moment, guys. Okay, so this is the Dow Jones, and this is currently what we are seeing. So yesterday, we saw, now the Dow Jones has, this is what's been happening with it. We had the NVIDIA earnings around the 21st of Feb, and then we saw, after the NVIDIA earnings, we saw a very sharp move on the Dow Jones, and ever since it moved higher, it entered some kind of a descending wedge, which is what it's currently in right now. Now, what's happening right now is we had a bearish flag that was set up around the 5th of March that was broken out of on the 12th. And at the moment, Dow Jones is still trading slightly below that original descending wedge. So the key level that I'm waiting for it to potentially reach is going to be where it breaks above that 39,000, 39,065 level. So if we manage to break above there, then we could potentially want to see whether it's able to reach the peak here. Okay, so this again is the ultimate level for today, and I want to see whether the Dow Jones reaches there. So for today, we could potentially look for potential buys, especially along these levels here, waiting to see how it performs. There is some kind of an ascending triangle that is forming up there that could potentially allow us to trade the Dow upside into this area here. Now, if we manage to get into this area but still fail to break the peak of that descending wedge from the 26th of Feb, then I think there are opportunities for us to sell it. But for now, there is strong momentum. Now, if you zoom in again on the 1 hour time frame, you'll notice that the Dow Jones had a lot of liquidity sweeps, and it had them along these areas where we had our bearish flag. So this again is a sign that there is some bullish momentum for this particular asset, and we should look for buys to the upside of that level there. Crossing over to NASDAQ, this is what's currently happening on NASDAQ. So NASDAQ, just like the Dow, was also able to break uh, to the upper part of its original descending wedge on the H1 time frame. And at the moment, it seems like it's aiming to reach this 100% fib level that we have on our H1 time frame. If you manage to breach that level, then the NASDAQ is going to be reaching for higher levels. But at the moment, we need to see how the price action evolves, especially along these levels right here. So if I zoom in again, just for a better picture, this is what we are currently seeing on the NASDAQ, okay? So the last time we reached this level, we had a very big bearish order block that formed along this level here, around that 100% fib level, which is around 18,391. When we got to that level, we saw that there was actually a retracement for the Nasdaq that took it below the descending wedge. So at the moment, it's now above that descending wedge, and it looks like it wants to attempt that level. But it is now in a bearish order block territory. This one right here. I don't know if you guys can see it. Just going to use a lighter color here. So this is the territory we are in at the moment, and just need to observe how the price action happens at this level. But Nasdaq still looks geared for a potential move higher, especially since it has a lot of liquidity sweeps above that descending wedge. So crossing over to gold, gold from NFP, gold was rising steadily. And of course, you can see that it was in a rising channel here. I told you guys when we met for the snapshot last week that there were three big bullish flags that were appearing on gold. Okay, and every break of the bullish flag has allowed gold to print a bullish order block that has not been retraced back to. So there is still a lot of strong demand on gold. And on the NFP, which was Friday trading, we saw gold actually reaching a high of 21,095. So it retraced to the bottom of the, it retraced back from that level. And at the moment, gold broke below this Davos box, which I drew, and it's also below its 50-day moving average. So at the moment, gold looks poised for a potential pullback. If we manage to take out the bottom part of that descending triangle, it's likely that gold is going to come and reach these levels of 7th of March. So right now, the best entry for gold could potentially be a sell. And of course, you might want to set your stop loss along these levels here, slightly below that Davos box. So if it does not attempt to get back into the box, which it was able to stay in a consolidation that was from Monday, I suspect we are going to see more selling momentum for gold that's going to take it down here. It could also be important for traders to also monitor what is happening on the DXY. So you notice DXY has been in a steady decline, and it's been in that decline for the bigger part of Feb. Okay, so until see it building up, until we see DXY building up some kind of bear or bullish momentum, it's unlikely that the trend is going to change. Okay, which would then allow us to see stronger gold. But the fact that gold had a very strong break with a very nice print of about the break below that box was a print of 120 pips, indicating that there's some kind of bearish momentum that has entered gold. So we need to just observe and see what happens there. Now, the other thing I also need to mention is the week that we had on gold, especially on the H1 time frame, was a very big week that appeared on Friday, and it was a week of about 90 pips. So you notice that there was this very, very big sweep that appeared there, a liquidity sweep that took gold back into this channel here. So I think there is some kind of trend reversal that is currently active on gold, and we should see the price changing over the course of the next few trading days. The other catalyst that I need to also include for gold is that we have PCE coming out. This week we also have retail sales. Should we see that resurgence narrative coming in for inflation in the US, then we should see, I think, a fairly relatively weaker gold. Now, the other important thing, of course, for you guys to understand is gold broke a 4-year resistance level. If you check how gold has traded from 2020 to 2024, it actually broke a 5-year resistance level because it was trending. It kept rejecting the levels of 2070, 2080, and even recently it rejected around November last year. We saw gold actually selling from these levels up here. If you guys recall, I think it was a Monday where we saw gold reaching that high, and immediately we saw it selling below. So it is now in a bullish cycle, and we could see it potentially moving higher. So if we manage to break above the top part of that triangle, if we see price action moving to the top part of the triangle, then gold might try to attempt to get back into that box, and we could potentially see it selling above. But if we come to the bottom part of the triangle, then it might be potential entry points for sell. So Euro USD also has some nice potential trades today. On the H1 time frame, Euro USD has printed what we call a descending wedge. Okay, descending wedges are typically used in short-term trend reversals where we trade the break of the descending line. So you notice that now we actually have two bullish order blocks. The first one appeared on the 1st of March, and the second one appeared when the ECB had its conference. I don't know if you guys are aware, but ECB had its conference last week, and the ECB during the conference indicated that there is likelihood that they might consider. They didn't say that they will cut. They said they might consider. Okay, mark my words, they might consider cutting, might consider cutting rates in June. So we saw that there was actually a sharp move in open interest for net longs for the euro, and I suspect it's also what is explaining that bullish momentum. The NFP data we also got on Friday last week supported a weaker euro, but then we saw that the euro actually has been choppy to the upside. So I'm expecting that we are going to see some relative strength for the euro today. And of course, on the big picture, will it to take out that sweep that we saw appearing on Monday. However, if we fail to break above the top part of that descending wedge, then I think we are going to get some kind of retracement happening for this particular asset, and we could potentially see it testing the bottom point here, where we shall see a retracement at least to that to the bottom part of that bullish order block. But since we have the bullish order block sitting here from our ECB conference, it's very likely that any retest of that block is going to support upside momentum, especially back to these levels here. So if you zoom in on a Euro USD, we still have a lot of levels to reach on it, because on a H1 time frame, we had a very big descending wedge that it has been in from around the 22nd of December up to where it is right now, and it briefly broke above it, and right now it's above that wedge by 200 pips, so indicating that there is potential for some upside momentum there for the Euro USD. So we are summing it up with the pound dollar today. Pound dollar today, we have been in a rising trend. We entered a slightly declining trend. That was on a H1 time frame, and this is what is currently happening for the pound. There was a very nice bearish order block there where there was a very nice entry for us to sell. But since we are seeing some bit of improving data, especially on the back of the GDP we got today, we should see a potential for us to move back to the top part of that 50-day moving average. So if we fail to at least reach the top part of the moving average above that 50-day, which is my blue line, then we should see us continuing. We should potentially continue to sell in this channel here, and I think we will see the pound weakening at least back to this level marked of 1.27400. So that's what I'm observing for the pound today, but we just have to keep observing to see the price action as it evolves. So if you have any questions, now would be the time to ask your questions so that I can handle them. So let's just have a look at the questions we have today. Questions for today. Okay. Apollo, you're saying, I'm liking this BTC story. Wondering what part will seize. Breaking new highs every time, followed by deep pullbacks. Yeah. BTC USD is tradable on FX Pesa on the MT5. And right now we are in a rising. We've been in a rising trend on BTC USD for the bigger part of 2023 and 2024. We're able to break out of that rising trend when we tested these levels of 59,522, and BTC is still in an uptrend. Okay, and of course this is on the back of potential halvening, which is happening in April, but also there's ETFs flow on the 11th of Feb, rather 11th of March. About $580 million Apollo entered into the ETFs. There are about 10 ETFs, and there's very big flow of funds into ETFs. Now, keep in mind that the bull market that we're having on BTC USD is very different from the original ones, because this one, we're having more traditional investors getting in, and I think it's going to allow us to see a much higher price there. Easy Show, you're saying, how do you confirm impulse in the market? Impulses are sharp moves to the upside. You can confirm them by looking at the kind of prints of candles you see. So impulses are sharp moves to the upside, and of course, mitigations, of course, retracements are sharp moves to the downside. So you will always be able to look at an impulse by the size of the sweep, the size of the wick, the bottom part of the wick. So if you have a bigger bottom part of the wick, that usually is a sign of impulse, especially if that wick follows with a sharp move to the upside. Like for instance, if you look at how you have these bodies like this one and this one and this one, all those are impulses indicating that there is potential move to the upside. Yesterday's 10-year bond auction, I might have to just take a look at it and see. I just need to see the auction rate to see how it did. But we are seeing that there is not that much response in the markets from the auctions. We used to get a lot of reaction, especially when the Fed had not yet ended had not yet ended their tightening cycle, but they seem to have ended it now, at least from hearing, at least from what Paul mentioned. Yeah. So the 10-year note auction, we saw that there was actually an increase there on the auction yield rate. This should be taken as a sign of a bigger, more competitiveness in the bond market, and I suspect that's the reason why we saw the rate increasing. But we did not get that much reaction on euro dollar and pound dollar. DXY also didn't really respond as much, so I think we might not really get that much reaction from these recent auctions. USD card, I don't have USD card here. I think if it's there, I've taken a while without looking at it. Yeah. So just from looking at USD cards, there's some relative, it seems to be in some kind of a rising channel right now. Okay. But we might need to observe and see what happens. Yeah. If we fail potentially to break to the upper part there, then I think we should look for sales. Keep in mind that most dollar pairs have actually been on a decline. We've been seeing it even with USD JPY. If you check USD JPY, you'll notice that it has actually been in a relative decline. So just keep on monitoring to see. If we break the upper part of that channel there, then I think we should look for buys. But if we break below this wedge, then we should look for potential sells and enter them at least to the bottom part of this level here. If I mark my fib level there, we should look for sales potential to this 100% fib. If we break above that 0% fib there, then I think we should see a potential move to the upside. Yeah, that's what we're having there. How do you place an entry when trading DXY? After DXY has confirmed when a particular pair, let's say Euro USD has confirmed. DXY is used more, less like a conditional indicator. So you look at the DXY to give you really conditions. If you're looking at buying conditions, for instance, sort of like, I would say, like bullish signs. Bullish signs on the DXY would then allow you to look for trades on the Euro USD for selling. Like for instance, if you look at the week that DXY had on the 1 hour time frame on trading view, you'll notice that actually DXY, the moment Euro USD topped around here is when we saw DXY also bottoming. Okay, so which means that use it more like a conditional tool. Easy Share is saying, I have a question. How do you confirm a retest in a trade? Retest is when retest in simple terms is where you have something like this. And of course, you'll have maybe the market selling from this point here, comes maybe like this, reaches here, potentially maybe sells again here, potentially buys again here. So a retest is when you have maybe this. Okay, let's first complete the channel. So you'll have maybe this, and then you see it this, and then this. So this point right here, okay, is your retest. Okay, yeah. And sometimes retests are not perfect, guys. They're not perfect. Essentially, they will happen. Sometimes you'll have sweeps. So for instance, if we have a sweep to the downside and then back up, then it means that also qualifies as a retest. Okay, because it touched that level, but then it moved back up. Yeah. So that's simple terms. That's how you can see how to go about that. Okay, easy show. I hope that helps. AUD USD. AUD USD, actually, I don't have it on my charts. Okay, it's right here. Yeah, so I have taken a while without doing analysis on AUD USD, honestly. I won't lie to you. But of course, it's also in a descending channel, just like we have seen on Euro USD. From Friday, we saw it actually getting into some kind of a descending channel there. And it's the one that it's currently in at the moment. So we need to just keep observing on the price action there. should we see a potential break to the upside. And keep in mind, AUD right now is topping as one of the strongest currencies for the year, okay, indicating that we are most likely to see a fairly bullish year for this asset, and we should see it trading at higher levels. So the trade for today, monitor how we do along this descending wedge we're having right now. If we break above it, then we should look for entries to the upside. Hello, Nobert, you've talked about expecting bullish trend on Euro USD and GBP USD. Make me understand why that is possible. Yet, according to yesterday's CPI data, we expect USD to strengthen this week. Yes, yesterday we had improving data for headline, but the data was mixed, okay? Because we saw it wasn't, but I would say it was a fairly hot report, but not too hot, okay? Let me first speak with Euro USD. So for Euro USD, you look at it technically, we are in a rising trend, okay? We are in a rising trend since I think around 1.07035. The setup I have for Euro USD right now is a setup for a descending wedge. And I want to observe and see how we perform at that descending wedge. Now, we got a fairly hot report for CPI LAMIC, but you notice that it wasn't very much of a hot report, because if that were the case, then I think Euro USD would be trading at much lower levels from yesterday. However, we are seeing that it's relatively choppy, okay? The trend for today for Euro USD is we need to observe and see whether we break above the top part of the descending wedge. If we do not break above it, then we are going to continue declining in this channel, and we could potentially break below this wedge to test this level here of the 38.2% fib level, somewhere around here, okay? So I'm not merely saying that we are bullish today. We need to monitor price action at those levels, okay? If we break above the wedge, we look for a buy. If we break below the wedge, we look for a sell, okay? How does a double top and double bottom line works in patterns? Double bottoms are for selling, and then double tops are for selling, and then double bottoms are for buying. Yeah. So I think I've handled most questions. That's all, guys, for me today. And I wish you all happy trading. I'm sure you're going to have awesome setups. You will be able to get some opportunities to trade, especially with Euro USD, like I've guided on, with gold, like I've guided on, and also with the others like the Dow and the NASDAQ. So I think that's it from me, guys. One more question: why is the dollar index weakening? Get according to CPI data, we expect USD to be strong. Lamek, that is just an expectation. Guys, differentiate expectations from what the market is doing. You don't trade what's in your head, you trade what you see, okay? Are we together, guys? You trade what you see. You don't trade what's in your head. Trade what you see. Yes, we saw a fairly hot report for the CPI, but we are seeing that there is still some kind of bearish momentum for the dollar, okay? So even when we want the dollar to buy, we do not trade what we want, we trade what we see, okay? So you need to separate your analysis from your emotional state of mind, okay? Yeah. So I think that's it, guys. I wish you all happy trading, and let's catch up then next time. Cheers, guys, and happy trading.